I started dabbling in the markets about 18 years back, and until today, it still continues to humble me. And I remember that in the early days, for me, it was all about acquiring hard knowledge. And yes, it's important to know all the technical information and stuff, but over time, I realized that it's really also about self-management. I might have mentioned before that it's the twin demons of fear and greed that are dwelling within us that tends to come out and causes us to take actions that are really not good for us. So my goal today is to go deeper, not just stop at those two emotions, and talk about what kind of actions it results in us taking. I'll share with you guys what I've personally experienced and also what I tend to see in the markets quite commonly. And of course, when you talk about problems, you always gotta talk about solutions, right? And that's what I'll end with. Hopefully a few tips that we can use to get better over time. Hey guys, it's Sunmin and welcome back to Your Money Game, the show where we'll save, invest and feel better about money. Let's start with an easy and common one which you always hear about, and it's born from fear, and that's panic selling. If you've not done that before and you've heard about it, you might be picturing some kind of scenario where somebody's furiously clicking the sell button because he's experiencing some major losses. And while that imagery might be true for some people, I actually think that it doesn't really help because the problem is a little bit more subtle than that. And to see the nuance, you actually have to take a little bit of a step back and pay attention to when it really begins, which is with your inner voices. So pay attention when your inner voice begins to say things like this. Oh man, it's down by 10% already. Should I sell? It's definitely gonna go down further. So should I just sell now and then get back in later? I made such a stupid mistake picking X instead of Y because Y is doing so much better now. So shouldn't I just sell X and cut my losses and just buy Y now? If you don't have a rational answer to those type of questions, like perhaps your investment thesis has changed or you really need cash now for some reason, and that's when you know that you're getting a little bit close to making a bad decision. Next is the opposite of panic selling, which is panic buying. More commonly, this is known as the fear of missing out or FOMO, and it's very strong in a few scenarios. Scenario 1 is that you're a shorter term trader that's always on the lookout for the best trade. And this explains itself because if you're always on the lookout, you're going to be in a situation where something is doing better than one of the trades that you have. Scenario 2 is that you're buying stocks or assets instead of building a portfolio. Think of it this way, a portfolio is something like a football team, and each player is doing its own role and collectively the team wins. So if you're the team manager and you're building this team and you don't have a clear idea of what role does this thing play, it's going to be a difficult time for your entire portfolio to win. Now this can be especially tricky if you're a younger investor or you might not have too much invested yet. But remember that it all begins with having a clear set of rules as to why you're buying something. The next example is a combination of greed as well as impatience and my desire to get rich quick. So when I was younger and starting out, I had these really big ambitions to become a super successful trader, living on a boat, sailing around the world, and really just making money out of thin air. And for me, that sure as heck beat my day job. I didn't like my job, I had big ambitions, and I had no time to waste. Now this was the perfect recipe to fuel the greed in me to take some really excessively large positions. I wanted each trade to become like a home run that's gonna make me rich. Fast forward to today and guess what? Those plans didn't really work out. I'm not on a boat, I'm not super rich, but I really am grateful that I didn't blow up my entire account back then. And the fourth problem is born from anger. And it's a weird one and I'm not sure if you've experienced it before, but in my early days, when I made a loss, I got really angry and I wanted to get even with the markets. And that in itself was stupid because there's no logic and there's no reason as to why my next trade should be influenced by what happened in the past. The market really doesn't care whether you win or lose. It doesn't care what your entry and exit was. It doesn't care about your past. So accepting and internalizing that is going to help reduce the emotional baggage you have in the markets. The final problem is born from the emotions of love, trust, confidence or faith. A more extreme version of this is when I see people making really big bets based off what somebody on the internet says. Instead, what tends to happen is that if you have one point of view which you gravitate to, suddenly, thanks to social media, thanks to the echo chamber that happens, it's either you are served up all the information which matches that point of view, or you are naturally attracted to that same point of view and you only see what you want to see. Regardless, the end result tends to be bad if you're making a really excessively large bet you don't really understand because you're trusting a point of view or a single source that you tend to be really trusting with. Finally, let's talk about some solutions. First, don't make decisions when you're emotional. The markets will always be a source of high emotion, especially if you're invested in it. The only way to reduce those emotions are through time and more experience and deeper understanding of what's going on. And as you let time do its work, as you grow your skills and knowledge, the best thing to do is minimize making any form of decisions if you're in a high emotional state. And this could be whether you're positive or negative. Made a huge loss and then you feel that urge to make back that money quickly, fight it. And if you've had a great day and you're feeling optimistic and wow, this looks like a fantastic trade, nothing can go wrong, fight it. Next is that you should widen your information diet. Follow whatever expert that makes sense to you, but always try to be open to opposing perspectives as well. For example, I have a lot of admiration for Cathie Wood, and I feel that her approach and philosophy of investing in innovation that has exponential growth and the possibility of disrupting industries, that makes a lot of sense to me. As a result, I own one of the ETFs which she has, which is ARKK, but I'm not building my entire portfolio based off her thinking. I also follow others who have completely different worldviews and the way they build portfolios, and in particular, for me, the influence would be about factor investing. The point here is to always be open to other point of views, and not because you want to act on them, but to appreciate that what could be the counter argument that will hopefully also help you build your own worldview as time goes by. The next tip is to automate and systemize things as much as possible. Despite being an advocate for building your own portfolio, I'm actually a huge fan of robo-advisors. I think they provide an underrated service by helping people automate the process and remove emotions from the decision-making process. Now you can do it too, but it just means that you have to be doing the hard work. If you're trading in the short term, make sure you have a clear entry as well as exit plan. Also, make sure that your individual positions are not too big. To give you an idea, last time when I was trading actively, I was reading about professional traders that have a maximum threshold of 2% of the entire net worth placed in a single trade. If you're holding longer term, it's always good practice to have a good to cancel order in the market. And that way, if prices goes against you and your trade has been proven wrong, you can be exited and hopefully you don't have to fight your emotions too much. The final tip is to gradually build your worldview. As an example, in the past couple of years, I've become more attracted to the macro view. That's why I'm following more new voices about how they see the world in a global sense, where they take into account interest rates, what's happening with the currencies, what's happening with precious metals. So as I'm learning from these guys and hearing their analysis and opinions, I'm also gradually trying to be able to look at the data for myself and understand what's going on. And for you, I hope you do the same as well, because gradually with that independent thought, that's going to help you weather the markets better. So that's that. Thanks for watching, guys, and I hope you really got some value out of this. And if you did, I would really appreciate your support in clicking that like, subscribe, as well as that bell button, because I'll be back again next Sunday with a brand new video. And until then, you take care and keep playing your own game.